Welcome back, guys, and to another edition of this week's just review of the market. What I've got open here is a daily Nasdaq chart, and I'll go at the end of the video. I'll go back on the stuff we spoke about, last week. But for now, a lot of change in the bias. If you can remember last week, I was fairly bearish, on the weekly and the daily. But let's go through it. So last week we spoke about, or the week before and last week, about this fair value gap up here, that we inverted it, and then I was obviously bearish into this fair value gap here, and sure enough it went bearish and it actually inverted this fair value gap, and that's what's called an IFVG. It's inverted fair value gap. And then my next target was these equal lows down here. Let me just show you guys. Let's take that out of the way. If you take these lows, those equal lows, so I was targeting those. But as the week gone by, there was a lot of PPI and CPI in the week. I don't know if that makes a difference, but we always have to go what the market tells us and not what we think the market should be doing. Obviously those equal lows is intact still for I don't know when in the future, but if you look at this swing low here, and the reason I'm using this swing low, this is the last swing low that pushed price higher through this swing high. And that retracement down, that is in discount. And if you remember last week, this fair value gap, or IVG now, lined up with the 50%, and I thought we might spike through it and close within it, and or break through and test to go lower. But in fact it broke through, it came up, it closed above the 50% of that IFVG, and then it inverted to the upside, to the the opposite side. And then what we targeted through the week, or at least what was my eyes was focusing on, was this new fair value gap. And this one then got inverted right there. And if you look at these little candles, 1, 2, 3, and this one, those highs are fairly equal. So that's another pull of liquidity. Now, my target for this week, or my view for this week, is look, price can drop down, go take out those equal lows, but I'm fairly confident my bias starting tomorrow would be look for any down candles, maybe test this IFVG, to obviously run these equal highs, quite a bunch of them. So that to me is quite strong. So I will go on a lower time frame to look for any obviously I will mark out the open of the candle tomorrow, and any price below that I would obviously see if I can find any buy signals to go take these highs out. But then you need to look at the bigger picture. Once we inverted this on a normal inverted setup, this little gap here inverted there, and that swing high was taken out. In inverted, there was no pullback in there. Normally it retraced back in there, but it didn't. So it pushed through, so it's quite strong. So we might just see it open and go for that and retrace for the rest of the week, or it can run those highs and then reverse to drop and target these lows. But at this point we need to stick to a higher time frame that tells you where market is going. And at this point, because we inverted this IFVG, I need to see price close below this at least to target the next one, close below that to then target here. I'm not going to say up here I'm bearish, I'm bullish, and I would then look at these equal highs, and right after that I will look at these equal highs, and that's that high and that high. That's the next set of equal highs. Sorry, I removed something here. Is it not cloning it? Okay, well anyways, it's gonna be that equal high. just do a clone here. Sorry, I'm not sure why it doesn't want to work. But anyways, then my next target, so this will be, let me just write it down, then you got it. So we're going to go target 1. That's my first target for this week. Then we've got a second target, target 2. And then we're going to keep an eye on what happens after that. Is this the next target? This fair value gap, and we just call it a fair value gap, not the IFVG. And that equal highs lines up with a fair value gap. So I'm most probably going to say this fair value gap to move in there, run these equal highs. That's going to be target 2 for me. So those are the 2 targets I'm expecting price to go to for this week. But bear in mind, guys and girls, we've got some big equal lows down here. I'm not saying it's not going to run through it. It might run through it for the week and then reverse, and then the following week do something to go down here. But we'll have to see. But for now, I'm not going to worry about these unless something drastic happens through the week. I know there's FOMC sometime in the week. I think it's Wednesday maybe. I'll have a look now because we're going to go through that red folder strategy quick and see what happened in the past week. All right, so that is what we've got. We came from a discount. We inverted these fair value gaps, and target is going to be this high here. That's the first target, and if we don't reject to close below this, I'm probably going to look at the next daily candles to see if I can get below the open nice buy entries to take it all the way to the top here. And then obviously if we invert this, then we're most probably going to go make new highs. But that's something we just need to keep an eye on. I don't think I'm not going to say I don't think, because I don't know what's going to happen. So target 1, target 2 is what I'm going to focus on for this week. And that's my reasons. And let's just look at the weekly as well, just so you guys can see why I am so bullish. On the weekly, you'll see this candle's low, and this candle's high. It's this big fair value gap here. We broke invert down, and immediately this week just bumping higher, and no long wicks and stuff. It's a solid candle up. So I'm expecting something to move higher for this upcoming week. But let's just see how high it will go. But for now, I'm just going to focus on a daily candle. Then what I want to do is, I don't know if any of you guys or who was following my, I just want to take these lines off, my red folder strategy. And what I want to do first, I want to just jump over to the news calendar, Forex Factory. You can use, I don't know, there's some, a lot of sites that gives you the weekly news. I use the Forex Factory, and we can see on Tuesday, there's some retail sales and core retail sales coming out at 8:30. So anybody who's trading my red folder strategy or, high news impact strategy, this is a time to come to see what's happening at 8:30 in the morning. And you're not going to trade exactly 8:30. You're going to wait for that big candle to form with those wicks, and then you're going to see where the market goes first, and then you're obviously going to look for an entry to target the opposite of that candles. And the reason for that is all the liquidity that stacks up on both sides of the candle because of the violent moves. Then Wednesday we've got FOMC. It's late in the PM session, so expect something, I don't know, sideways or something, maybe not so sideways, but spiking up, spiking lows, and stop people out on both sides of the market. So seek and destroy type of action. So I would not come in AM to try anything. I'll just wait for the 2 p.m. session or candle to form and see if we can get that, that violent candle again that we had this week with PPI and CPI, and we're going to go through that now. And then we've got Thursday, we've got unemployment claims. Don't know how big that would be after all of this, but there's only 3 days that you should be at your screen if you're going to trade a strategy that's profitable, that's high probability, and it's going to give you an exact trading plan to come and try to take, to focus on trying to take money out the market. And this past week, on those 2 days, we took out just short of $10,000, and we didn't over leverage by, doing 15 minis, or it was 1 mini at a time. And I'm going to take you guys through that now. I've made some follow-up videos through the week explaining each and every one, and so you're welcome to go look at it, or go, and in this video I'll link to the actual strategy explanation, and you can have a look at that as well. Alright, so that's what we've got. Tuesday, Wednesday and Thursday we're going to come and look for that strategy. I will record it again, I'll make some videos, and I'll take you guys through it. But let's just have a look at what happened in this past week based on the strategy. Remember last week in my videos I said the only 2 times for this past week was Wednesday and Thursday. The rest of the week you've got nothing to trade. You only come for CPI and PPI. And what we're looking for, and we said on Sunday, what we're looking for is a candle at 8:30 in the morning that's violent to the upside and downside, and then stops in the middle, and then find a target on either side and run liquidity, and then obviously reverse and go to the opposite side. Alright, so let's jump to the charts quickly and just go through that quick. And obviously if you've got questions, don't be shy, pop it in the comments below, and I'm happy to set up a session with people to go through it in detail to make sure everybody understands and obviously can benefit from this. Alright, so let me see. Okay, so we're going to go back into the charts here. Let's make it bigger. It's sorry, I want to go to the 1 minute chart here, because that's where we're trading off. So I just want to show you guys on Friday what happened. Friday, for some reason, I didn't check, but I did see this. Something happened at 10, so I don't know if there was any yellow folder news or something that happened. But, I mean, here's a classic example. You saw this big candle running buy side and stop for the sell side. But this is what you would have done. You would have marked, let's just make it blue maybe, so it stands out, I think. And here's another one. Alright, so as this candle happened on Friday, if you were in front of your laptop or your PC or wherever you trade from, this was going up. Look for the fair value gap. That's my entry, and your first fair value gap after this that got inverted would have been that one. Sorry, let me just do this. Right, so there's a fair value gap down here. So if you missed this fair value gap, I mean, that's a big candle coming down, didn't test it. It closed through this one as well, and I didn't take this trade, but just want to show you guys how you could have traded it. You could have done this. You could have shortened, so there was no test there. So you could either have taken this up here or waited for this fair value gap to close down here. You could have taken this trade, yeah, and maybe up there just to make sure it doesn't run up all the way there. And that's a 3-to-1 risk reward. Or you could have waited for the test here to get a better entry at that 50%. But the minute this thing starts moving and taking this out, like here, you move your stop to obviously break even. So I'm not going to say that's the risk reward over there. Almost probably, if I had to trade this, I would have put my stop above this, just making sure there's nothing that it wants to miss that and spike through it and then stop me out. But anyways, that's a good 3 to 1, 3.26 to 1 risk reward. Again, you marked the two liquidity pools, and the reason is it just spikes aggressively to the upside, downside, and trap people on both sides of the market, and then gradually go through the session, stop them out, and then go to the other side and literally just pip them out. And that was on Friday. But let's go to Thursday. And Thursday was also the 8:30 is this one, yeah. All right. Then 8:30, ignore this blue chart, but this is the candle. Make this nice big spike up, and then this thing, this chart actually came down, and there's the, there it ran liquidity, immediately dropped down. Fair value gaps, not that interesting. What I did take, and I said in a video, I actually took this, and when I look at it afterwards, that's 50% there. I thought I want to test it and then run higher. I got stopped in this, so I lost this trade. I did not take this fair value gap down here, and I'm going to explain to you guys now why. And all of these things are the rules of a fair value gap. Because this fair value gap aggressively closed higher, the next candle came and take out this high, then you just sit on your hands, because that could quite easily just come down and go below that fair value gap. And in this case, it came down. If you didn't do or comply to this, you would have entered here. Say arguments that I did enter here, I was down 2 trades, but then this was the ultimate one, and the reason for this ultimate one, it's clean, it's A+, and you'll see now. Okay, so this fair value gap got inverted. There was a liquidity that was taken, which is great. Another liquidity, aggressive, and aggressive reject, comes back and tests it. Now this high here wasn't taken out. It's fairly even, so that's equal highs. This, if you took this high out here, I would have said, yeah, it's fine, don't take the trade, and then I would have just left it and looked for something else. But when this comes down to test, that was your entry, and that's normally my entry, at least, is on the test. And then I have another entry at the 50%, which I didn't get. I thought I was going to get it on the second one, but I just got the first entry. That was a 6-7, almost 7 to 1 trade. So that's 7 and 3. That's a 10 to 1 on Friday and Thursday, -2. So you're still up 8 to 1 for the week. And again, we ran through the lows of the liquidity candle, and then we make our way up to the upside. So we ran both sides again. Then Wednesday, we had, that was PPI, and then CPI was on Wednesday. And here is the Wednesday candle. Okay. So Wednesday came, 8:30 came, news came out. You marked a high, and I did not mark this low. I actually marked this low down here, and I'll show you the reason. The reason for this was there's some equal lows here, and I was just targeting that spike or that dip down to take that liquidity, and I thought, okay, that could be a nice liquidity, and to take the straight, wait for trade to come down here. But nevertheless, if you really looked at it, this was your inverted fair value gap. This is where the entry was, right up here, you would have put your stop below the fair value gap, and you would have gone up 3 to 1 up there. That's the one trade. If you then waited for this to run up, there's a fair value gap, it didn't break it, it went up, didn't break it, went up, form a fair value gap, inverted to fair value gap there. But if you waited for this fair value gap, I mean, you could have taken the stop one and you would have entered right on the 50% there. I normally wait and it aggressively pushed down, break structure, and then I was just waiting for price to come back. I took the one entry on the test on the bottom end and then another one and a 50%. So I got both my entries to short this fair value gap. So let's say we did on average that, and I was above this actually, and then I just targeted this down here. So that's another 8 to 1. So 8 to 1, 7 to 1, and a 3 to 1. That's 18 to 1 in 3 trades. You lost 2, so what, 16 to 1. 16 to 1, that's just short of $10,000 for the week. And if you were on a funded account and trying to get funded, I mean, in this day, on this particular day, you would have got funded quite easily. And by just trading one mini, even if you trade some micros, you would have got your entries, because there's multiple entries on the way down. And the same would have happened on Thursday. So if you had 2 accounts, you could have get funded on both accounts. And this week we'll have Tuesday, Wednesday, and Thursday red folder news. I'm going to do exactly the same that I showed you guys here. And I'm going to record it again. So I'm telling you guys today, if the candle is a small candle like this on Tuesday, Wednesday, or Thursday, I'm not going to bother, because the risk reward is not going to be big. I need something that's worth a while, and I need the market to run away with the market to one side and then comes back to close the gap on the other side. So I hope this video adds some value to you guys again. And remember, I'm going to look for buyers early this week. And obviously, I'm not going to try to jump into trades for nothing. And I'm going to focus on Tuesday, Wednesday, and Thursday to see what we get on FOMC and the retail sales. And I can't remember what the other one was. And see if we can get some nice liquidity candles, and see if I can find some nice trades. And yeah, if you guys are keen to to trade FOMC, let me know, and I will go live actually on FOMC night and see if we can get an entry, and you would see it firsthand without a recording, a live session, to see how it's traded. And I think through all the red folder news on the week, FOMC is by far the biggest one. And let's see what it presents and see if there's some nice opportunities to trade. I'm not inviting you guys to come and trade live on Wednesday, because this is not financial advice. But this is obviously for journaling purposes. This is a strategy that's is traded on other YouTube channels as well. And if you actually put the work in and actually go back test this and live forward test, you'll see how this happened. And there's a story behind this. It's a candle that shake everybody out on both sides of the market, and people that's not get shaken out, they obviously put their stops there. And the market is just built to run both sides, to take those stops out for people who doesn't take profit. So let me know, give me a thumbs up here, share my channel. Let's see if we can grow this channel together. But I'll definitely post more videos like this to give you guys good insight. There's a scalping strategy that I use if I don't trade this strategy, which I'm not going to obviously put out in the market yet, because I'm testing it, and it's been going well so far. And I'm happy to once we hit our first 1,000 subscribers, for me to go on internet and just put a video together to show you what it is, to give you some other tools to play around while you sit on other days waiting for red folder news, because sometimes there's no red folder news and it doesn't present all those candles. But yeah, let me know what you think, and if you've got a different view, let me know, and let's sit together and see how the market plays out. Have a good Sunday, and I'll speak to you guys in the week. Take care and be safe. Bye bye.